Hey, it's Professor Mike, and now we're going to talk about the payroll and personnel cycle. One of the things that's really important, especially in software companies, is people. And a lot of times you see the things like, oh, people are our most important asset, and you go, oh yeah, right. But in software companies, especially technology companies, it's true. The people who develop products, sell products, they're the lifeblood of your company. That's how you create intellectual property. And that's why so much of the assets in a software company are not on the financial statements, which is one of the challenges with our current reporting. The people create technology that is then sold. So, the software that runs Uber, the software that runs your phone is not on the financial statements of either Apple or Google, right? And there's the software that runs Uber is not on the balance sheet. But it is the result of the intellectual property work done by employees and the value creation done by employees. So the hire to retire cycle, as it's called, is very important. You want to understand how people are recruited and how they're hired, what kind of background checks are done, what kind of patent protection they have. Like, do they sign proprietary information assignment agreements, which establishes what intellectual property an employee has created before joining the company, and it states that the things that are done while an employee of the company are, and especially on the company's assets, are in fact the property of the company. So that kind of practice protects the company's intellectual property so that it can't be taken to the next employer. You see this over and over again with Uber versus Google on self-driving cars, and you're seeing it with different operating systems and different uh, different things like Tesla's had these issues and others, right? So all kinds of things in the hiring side, and then the employment categorization, like are they a contractor, are they employee, where are they located? All these things matter. So you want to understand these processes, even though from an audit perspective, from a dollars and cents perspective, it's relatively easy to audit payroll, but it's all the things surrounding employees that can impact the financial statements, adversely. So that's why you want to understand this. So, payroll basically, gets ultimately categorized into cost of goods or cost of revenue, and R&D, sales and marketing, and G&A. And all the categorization of employees is important because analysts look at how much you're spending on R&D, how much you're spending on sales and marketing, how much you're spending on G&A, right? If you look like you're spending too much to acquire customers, then that reflects in the sales and marketing line. And if you have significant headcount in that line, that's going to drive down your valuation because it's taking you too many people to sell stuff, right? If you have too high a G&A, it looks like you have a high overhead. So that's why and R&D engineers are valuable. People actually sell the people in their companies called acqui-hires. When companies aren't doing well or close a division, they might sell the team to another company. Why would the other company buy them as a team? Because it's relatively easy and they save a ton of recruiting effort to get a complete team that has a track record, as opposed to trying to pick these people off individually. It's much more efficient, much easier. So in Silicon Valley, only the big companies really run payroll in the house. I mean, run it on the payroll system. Most of this is outsourced at this point, either system-wise to an existing software provider, SaaS provider, or completely as a service. There's companies like Gusto that have emerged in the past 10 years that provide payroll services to a lot of startup companies. There's also professional employer organizations like TriNet, like Sequoia One, that provide not only payroll services but benefit services and HR services to companies, and actually become the employer of record for the company, even though technically they're on the payroll of the company, the individual company. The PEO takes responsibility for all the tax filings, all the hire to retire effort, including uh, terminations and things like that, and you pay a fee for that. They also file the payroll tax returns, as do most payroll services. So you're not held responsible for that. Um, and then on the PTO side, paid time off is one element of compensation. You hear vacation pay and sick pay and paid time off. Paid time off is kind of the combination of vacation and sick. So it basically says, okay, we don't care whether you're sick or you're on vacation. We're going to treat it as one lump group and give you a certain number of days of that. And a lot of Valley companies have gone to this concept of unlimited PTO. Why? Because they don't want to track it, and because if you are, if you're familiar with the financial statement accounting for accrued vacation PTO, let's say that you earn $52,000 a year, so $1,000 a week, and you get 4 weeks of PTO. What expenses recorded if you don't take any PTO during the year? It's $56,000, right? Even though you only earn 52 and your paychecks are 52. Why? Because you are, from an accounting standpoint, you have to accrue that $4,000 for the 4 weeks of payroll, PTO. And then if you leave the company has to write you a check for that extra $4,000, assuming you haven't taken any. So it costs the company more to actually offer non-unlimited PTO, because in an unlimited PTO scenario, you if your salary is 52,000, you make 52,000, whether you've taken PTO or not. And when you leave the company, you get nothing in accrued PTO. So, it's beneficial for the company, and it also gets away from kind of this industrial revolution kind of, concept of you work hours, you got accrued time off, things like that. No, it's more like, okay, you do the work, and if you do the work, then you can take time off, right? So there's various philosophies on this, but I think we see this a lot, so that people can just be much more flexible. And then bonuses, you normally only see those in established companies, honestly. Venture capital backed companies that are private, especially those losing money, the VCs don't want to see people paid out salary and bonus. They'd rather see their interest align with the employee's interest, which is to give them equity. And then if the equity is worth something, it's worth something both for the investor and for the employee. Everybody wins. So you can see all the ins and outs again. Basically, anything on the debit side of all these accounts flows through cash as a credit to cash, and then anything on the credit side flows into expenses generally. Obviously, the classes of transactions are really going to be all payroll and expense reports, and then the business functions are really going to be around HR, and then payroll usually is in the accounting function. So the people hiring are not the people paying, right? So you've got two different departments. That segregation of duties, limits the chance that you can have, bogus people on payroll, which has happened. So, the hiring to retire is one of the key things here, and you want to understand that entire process. Okay, so the HR side is a big component of this, as is the payroll preparation. Again, if you're in a software company, most software companies have exempt employees. Those are people who are not subject to overtime, not subject to hourly reporting. So you're not dealing with time cards or anything like that. Um, so, most payroll for software companies is pretty straightforward. But again, there's employee classification issues. Should somebody be an hourly employee or not? These are the types of things that you need to understand, because that does provide some level of risk to the company, as does the contractor versus employee consideration. Right, so kind of here's your journal entry layout. I'm not going to spend a lot of time on this. It's really about understanding controls around hiring and uh, terminating, and then also understanding controls around payroll and payroll processing. Um, Segregation of duties, authorization, especially things like bonuses and other payments, and then privacy. Employee privacy is critical as well. When you're dealing with social security numbers, you're dealing with health benefit selections, things like that. In the case of benefits, if you're self-insured, you may be dealing with specific circumstances of an employee's medical situation. All of this, it needs to be extremely private. And payroll people will have access or knowledge of a lot of this stuff. And so it's really important about the controls around employee privacy. Um, there's analytics are easy here because you can look at salaries and compare salaries, and get a sense of who might have an unusual salary or unusual amount of payments. And again, computer assisted audit techniques can be very, very helpful here. Um, it, when payroll is a big part of inventory, you probably are going to put more emphasis on payroll because it is an element of cost in the inventory cycle. Excuse me. So that when it gets capitalized in inventory. If you're accounting for internal use software, then there could be payroll capitalized into that as well. So when you're capitalizing some element of payroll into an asset, you will apply more detailed procedures. Basically, these are the same things that we've seen consistently. You identify the business risk, then you identify performance materiality, and then you figure out if internal controls are going to save you time. If they are, then you test controls, right? And then you'll figure out the appropriate test of balances based on your assessment of internal controls and based on how much substantive analytical procedures you've been able to do. And you can see there's a bunch of different analytical procedures you can do, like and again, computer assisted audit techniques, right? People with this job title earn this average salary. Does that salary make sense? Does it compare to prevailing wages and wage studies, right? Does it compare to what their target compensation is, right? A lot of companies will say, we target our compensation at the 50th percentile of X survey, right? And so you look at the survey and you compare the salaries and you see if they are in fact hitting the 50th percentile of that survey. And that will provide you pretty good audit evidence, okay? All right, on to chapter 21.